Alright, January 15th, 2024. Um, it's a holiday, bank holiday, so closure at noon, reopening at typical Globex openings, 6 p.m. So I didn't expect much. It's usually just like a small range day, and we're in a horrific ranging choppy zone on top of that. Price is just not ready to leave, and this whole week news is just ugly, so I don't really expect, technically, I shouldn't expect any large expansion. So lots of reasons to think that this is just going to be ugliness as far as the market goes. With that in mind, then I kind of really need to, I kind of based my model today on only taking it the extremes than what I consider an extreme. So anywhere between the 60 to fully outside of the range of what I would consider a dealing range for the day. I guess better put. But anyways, let me go ahead and bring up my profile chart. So, well, first we'll just take a look at the high time frame. So, top left. So we can see here that we've been sitting above this large daily SIBI, and bodies are not closing above 150% projection from the daily, from this swing low. And yeah, we're just sitting up there. We retrace down to the top of the SIBI on the daily today. And I was monitoring how far we would go into yesterday, or Friday's candle, which we dove just a little bit beyond 50%, which for me is 50%. That's a super discount from a previous day range. You technically, like what I like to see, and I'll explain here in a minute, I like to see if price is going that deep for a discount, then it should be right the mean threshold of that candle. It should be there should be important TPO levels that are representing the same idea, and providing support with projections. So let's see here, a 5 hour, I mean, yeah, just chopping in there between the 5 hour SIBI and the 25% into it, back and forth, just working in there. And then we go to the 8 quadrant chart, and this morning it failed to reach 50% of the 8 quadrant and formed what kind of looks like an order block. So we might see expansion. Gives me a little bit of a bullish sentiment in the coming days, just because we didn't close below. I kind of would have liked it to tag the 50%, but we didn't close below. Maybe it will on Tuesday. We'll see. But as far as this goes, I mean, we haven't got to the 200 mark on the daily, which 200 puts us right here on that fill for that little tiny daily SIBI over here, right in here. So we'll see. There's an order block there. We'll see, but I'm feeling, I don't know. Yeah, it's been a hard market to read. So let's go ahead and move on. Don't want to make this long, so let's see. Top left, bottom left. TPO, so let's look at where price has spent time. We can see here that was Friday's range here. It left a lot of inefficient, didn't spend very much time up here, so that's a draw. The overnight profile did mainly put time in here. So you could say, I mean, of course, it's always the answer, right? It's either going one or the other, but you could say that they were building a cost basis here, and we're looking for a pretty decent expansion higher. If it breaks below, I'm thinking we've got a market structure shift, and we're gonna turn bearish in the market. So we'll monitor that, of course, but my thesis right now is that they've been building a cost basis up here for an expansion higher. But some other people out there are suggesting that we're gonna be moving from 1600 to 1700 for a few months. So if that's the case, I mean, we're at 1700 now, so maybe we're not going lower. I mean higher, but we shall see. Price reached up to the midpoint, almost failed to hit it, but it did hit the midpoint of the previous RTH session right here, that yellow line. And I'll show you on the other chart right to the tick, basically, just colored outside the lines by a few ticks. Over here we can see that we went up in the Asian range here. London continued the trend and then formed an area where it hasn't been painted very well. Dropped, and then we had our early morning prior to the kill zone. Kill zone opened and then took overnight. It took out the overnight liquidity, which you can see over here on this side. It took out that purple area low. So I was super focused on that, and I was super focused on seeing price leave this area and come and try and work this area, but there wasn't enough time. It failed to do so. It reached for it, but it failed to get in there and work it the way I was expecting it to. Alright, and we've got all kinds of new week, new day opening gaps in here from the past, so it's just chop haven. Looking at my projection chart, here it was only able to go one standard deviation. I mean, it's kind of expected on a day like this. Take out the sell side here. One standard deviation below perfectly. You can see that the low there, right? I mean, perfectly. I'm just looking at that to the tick. 936 and a quarter, 936 and a quarter. So, and I've got this gap here that I was expecting to see an inversion fair value gap form, and as it stands right now, it is doing so. Bodies are not closing below the consequent encroachment of that area. So my bias is for still a push higher at this moment. I do have a suspicion that it wants to come up here and work this inefficiency and possibly reject. So that is another scenario that we can hold in your view of potential. So if you do find a long here on Tuesday, you're going to want to keep that area in focus and definitely exit some of your position. Pay the trader, right? Okay. So, bottom left. So, this is my main chart. This is where, you guys know I do all my fun. So we can see that last night, price opened, went down, reached for the equilibrium of 2 days ago, and then moved. Most of the move was done overnight. So what can we see that it reached for? It was trying to reach for the 830 level. Is there something I'm missing? Let me pull back a little bit more and see. 830. Yeah, it was reaching and failed. So I got yesterday's open. It got the midnight retracement, and it got into that rejection block over here. Okay. And this morning, so this is going to get difficult on the eyes. Let me take this off so we get a little bit more room. This is going to be difficult to see, but let me turn back on my drawings for this chart. So we've got the range, and I took quite a few early trades, even though it tricked me here at the 100%, the bottom of the Asian range. I was really looking to see, the whole time this was where I thought price was going, because it's 4 deviations, and it aligned perfectly with the half back. So 2 days ago. So, and at the same time taking a form of sell side. So that was, that's where I've had it planned. But when the bodies on this macro were respecting the Asian range low, I took a few trades. I lost a little bit, but overall, my new trading way is that I enter once for risk, and then I'll enter a second time once I feel like there's enough buffer room that I'm in the proper order flow. I'll enter again on another opportunity, and that way if the trade goes against me, it'll just eat into the profits from the original contract, and then I'll adjust my stop according to that situation, and get out at break even or above when the situation presents it. So I'm going to turn on my trades here, and now it's going to get pretty tacky. But I knew I was in an extreme discount. I was taking some trades because I believe we were going to reach down here. Got stepped out a few times. Mainly what I want to focus on is which was the major win. Was this, of course, down here where my original bias. I'm glad I took those other trades because you're practicing trade management, and there was a reason behind the trades. They weren't willy-nilly in a sense, so good for you on that. And you were managing the trades fairly decently, right? So only a few of them turned out to be negative. Can bring my trade performance for today up. So it looks like your gross loss was 18 points, $366, and your net was 66 points, right? So I think that's a pretty good range. 48 points. If I could only do that every day. 16 total trades, 12 winning, 4 losing. Okay. I don't know if there's any other data I really care about right now. That's just the point. Okay. But, so we can see here the final London manipulation. You can see London opened and manipulated up and broke. So that is the range I'm looking for to search for my projections, and that's why I'm always interested in. I think extreme discounts are between 3 and 4. They say that typical reversals can happen into 2 and 2.5, right? And ICT says, depending on your trade idea, that 1.5 is like super sweet in a sense, because it's highly likely that it will at least reach that, if you're right. But and you can see right here how perfect. I mean, it was that sell side aligns with 1.5, and it happens to be pretty much exactly 50% of today's range, today's candles range. So, but in here when the bodies were respecting that, I went long um, in here. I went long here because I noticed that the bodies were respecting it, and this is kind of going against my trade rule, right? Because I'm supposed to enter down here and then take the second trade on another opportunity so that I have that buffer room. And here I kind of broke your rule in a sense because you went in at a high, even though, and it was kind of horrible, honestly, not horrible, don't say horrible, just high, very risky because of this sell side imbalance that you would see some kind of rejection coming up into it. So the fact that you went in there, you should have waited for it to come back down. And you kind of know that. You know that, Kevin. But I was worried it was going to expand because it was the end of the algo and the kill zone had opened. So I guess that was probably your thinking, that it was going to run away from you. So more like FOMO than anything else. But when it came back down here, I knew that was another opportunity to get a discount purchase. Right back down. The bodies were respecting that level, so you can see I went in right at that order block, that little triangle there. So great entry. Your trade idea worked out, even though you did it in reverse. And then you ended up taking some profits up here and up here. The next, your main win was down here because this was your original trade idea, and that's technically on the road to success here. That's what you're supposed to stick to. You had your projection aligning at 4 from the London manipulation, aligning nicely with your TPO price levels, and that's why you went in twice here, watching price action on the 22nd, and I wanted to show you this one though, also on my 64 quadrant chart. I grabbed the manipulation of this swing and just pointing out that 4 deviations as well, which is, right to the bodies were respecting it. So, confluence. And I think you, well, let's see, you got out, took one out because you were worried about rejection here from the open, so you paid yourself, price went back down, started showing more structure, and you got in again, and got out right at the T1 halfback, just before it, because you always, you never know if you're going to get filled, if it'll just tag it by the wick and not fill you. So not bad, not bad. I mean, there's a lot more in this that we could talk about, but I'm just going to stop it here. And as far as journaling goes, I think, luckily some of the larger trades worked out for you, but it was very risky as far as that that one that you took long inside of a city. And, you're in a discount, but there were better trade entries expected trade entries. And if you in your heart knew price was still trying to reach a target based on your analysis, then just remember, if that is the case, then you need to really just be not expecting it to run away yet until it achieves that target. So quick in and outs if you feel like there's a good idea to make small little wins, but if it hasn't reached your target, then don't expect that prior. So make sure you're getting out at sensitive levels so that you're paying yourself and not just trying to get chopped up, right? So, yeah. Um, it does it.